So basically, like your bio is pretty easy. You were a nobody private equity guy. The pandemic hit. The pandemic hit, and you're like, I'm gonna be somebody. In a matter of 2 years, you got famous on Twitter. What do we have? 9 or 800,000 followers. So you got famous on Twitter and basically transformed your life all because of Twitter and COVID. Is that right?
I mean, the nobody private equity guy designation is not unreasonable. I mean, that's like, I think that's totally fair. I mean, there's a lot of nobody like finance guys that are making bank out there though, right? Like
that would have stung, but now you're like famous and stuff. So now it's okay to laugh at it.
I mean, I don't know. Like, do you think it stings? Like if you're making pretty good money doing something like that? I mean, VPs in private equity at this point, if you're doing well, like you're making 7 figures as a VP in private equity.
Name 4 of them.
Yeah. What about, dude, I hung out with some PE guys the other day and I didn't know them well enough, but obviously I just, in the back of my head, I was, how rich are you? And that's like just what I wanted to keep asking. If you own a PE shop, is it safe to assume that you're just wealthy, and how much do they actually earn?
Yeah. I mean, if you are if you are a GP, so like one of the principal owners of a private equity fund, and you've been doing it like across multiple funds that have performed well over a period of time, it's pretty safe to assume that you've got a net worth north of $50 million. Because, I mean, you just like simple math on it, right? Most of those funds are taking like 1.5% to 2% management fees on, you know, if you're running a big fund, 500 million plus, $1 billion plus, if it's like a real substantial fund. So there's, you know, 20 million plus coming in a year on $1 billion fund. And realistically, most of them don't have that many employees. So they're not having to actually pay out a ton of that in terms of like, you know, operating costs. And then you have carry, and they're taking, you know, 15, 20, 25% of profits above their hurdle rate, whatever that is, 8%. So you're like, you know, you're talking about if they double the funds, there's $200 million plus of carry to go around. And so the principal owners of those are taking the lion's share of that,
which is how much?
Carry. I mean, if there's 200 million and their principal owner owns 20, 30% of that, it's a shit ton of money.
And I think that I can't decide if it's jealousy because I'm like, you guys are making a lot of money for what feels like not a lot of work, or if it's actually, I dislike them because I feel as though they're just like Excel sheet monkeys and they're like not actually creating value. Where's the reality?
No, I mean, they work crazy hard, man. I don't know anyone that is a longtime GP in private equity that doesn't work, you know, 70 plus hours a week of like stressful work. I mean, it's the type of thing Sean would absolutely hate. Like you think about like people that care about leverage on their time, it's like pretty piss poor leverage and it's high stress work because you're putting a bunch of debt on these companies typically. And, you know, during a downturn like right now, right, it's hugely stressful because you're constantly dealing with like breaking covenants on the debt and having to restructure. And, you know, like basically what ends up happening is you spend 80% of your time on the like couple of losers in the portfolio, and the winners, you just like kind of get to set and forget it because they're growing. They're, you know, you're getting like a levered upside on them because you put, you know, 70% leverage to buy the company, 60% leverage to buy the company. And you're just like eating off those couple of winners, but you're dealing constantly with the ones that are losers.
So Sean and I have our hand in this world where like we've definitely sell and have sold courses and information stuff. We also have a podcast. And so that's like this like personality world. But then we also have built nice sized companies, and we will continue to build very likely much bigger companies. And so we have our foot in that world. For you, you have your foot in like the PE world as well as the thing that we're in, this information thing. Where do you think that the information world or whatever we call this thing is actually is it an equal revenue or net worth driver as like some of the traditional company building or PE stuff?
Yeah, I mean, like, I think you have to think about it in terms of like your, you know, profit potential multiplied by like the freedom and time freedom that comes with it, right? To like get to like kind of an adjusted profit that you can generate from something. Doing it in PE and like making $50 million in PE from a time adjusted standpoint is a pretty grindy way to go do it. It's like high certainty. If you're at a good fund and you're rolling with a good fund and you're like going to be a partner there and you're going to get more and more carry across, you know, bigger and bigger funds, it's a pretty low beta way to go and generate that type of, you know, that type of net worth. But you're going to be working your ass off until you're like 60 years old doing it versus, you know, you go on the information side into the information economy and you're like doing newsletter, doing podcasts, courses, stuff that you guys are doing where you're like, you know, Sean might do his course and in a week make 300K. and then be able to chill for, 2-3 months if he wants to, because who cares, right? It's like, it's just a totally different time leverage. So I don't know. It sort of depends on like what you want to do in that regard.
Dude, what's your job now?
I mean, I kind of do like 10 different things. I've got the fund, so I ended up raising the fund. I didn't do the rolling fund like Sean, but I've got a $10 million venture fund that I raised from, a handful of institutions, and then a bunch of like the GPs at big funds invested in it and basically like kind of share deal flow. I've got the newsletter, which, monetizes, like, well, we can talk about it, but like, with newsletter sponsors now, it's 125-ish thousand subs, and, it makes anywhere from like $3,500 to $6,000 per send right now. And I send it, 8 to 10 times a month. So, pretty nice, just like business that scales. To your point on like time leverage, I write the same 2 newsletters a week, and it's a pretty nice business. And then I had this agency business that frankly like started just because it was like something that I saw, as an arbitrage opportunity early in like 2021. And it ended up scaling into like, order of magnitude, probably like close to 6 figures a month, gross revenue business with super high margins. And so I kind of just like kept doing it and kept walking into different areas with it.
And I don't know if you guys talked about this already, but you had come to us, or you were kind of talking in our group chat about like the fork in the road moment you had. You were, like we said before, no name private equity guy, making good money. And you had started tweeting out stuff like pretty regularly, I would say, I don't know, 6 months or a year before that. And it was clear you had momentum. It was clear you were good at that. You were getting followers, maybe had 100,000 or 200,000 followers, maybe at that time. I'm just rounding around. And, but it wasn't, you didn't have all these other things like this clear, like I have a fund, I have a newsletter that makes money, I have an agency that makes money. So you didn't know exactly what was on the other side of that hill. And you were debating, what should I do? Should I, the fork in the road a lot of people have, should I stay in my job? That's a good cushy job. Or should I, take this leap of faith into the unknown? Give us like the 2-minute story of like, how did you think about that? And how did you decide? And was that the right way to think about it?
Yeah. I mean, I, like a lot of people had the like COVID moment of what the fuck am I doing with my life? And, am I happy doing it? Like, all of a sudden for the first time in my life, after, I guess it had been 6 years working in private equity, which at the time, it was like 80 to 100-hour weeks, right? So you don't really have time to look up. You don't think about shit because you're just working and you're making more and more money. And so you're like patting yourself on the back. Things are good. You're Indian, Sean, like Indian mother thinks it sounds impressive. Things are good. She probably wants you to go get an MD, but it sounds pretty good.
Is that what your mother wanted you to do, Sean?
My mom, yeah, she was, that all those things. She definitely was like, don't leave a good paying job. That was just like a general rule or general rule of thumb.
I mean, my mom to this day still asks me why I didn't go to medical school or why I didn't get a PhD. In all seriousness, like the Indian mother thing is sort of a meme, but it's also very real. The like, you should go work for McKinsey if you're going to work in professional services. That's the only place that is that's respectable. But yeah, man, I mean, I was doing that. COVID hit. All of a sudden I was like, what am I doing with my life? Had time on my hands to actually like think about other stuff for the first time in my professional life. And so I started, the Twitter thing, I started writing, and I didn't ever think of it as a potential way to like go make money or get another job or do something else. But as it started to grow and as it started to spiral, we were in this like group chat together, right? And I started seeing friends from the tech world, how they were leveraging, platforms, Twitter, et cetera, to make money. I was like, I wonder whether there's a way that I can actually, build like a little side hustle with this, like whether it was courses or whether it was an agency business or like whatever it was. I never really thought about the fund or investing side at the time. And then candidly, like I had a conversation with you, Sean, that I remember being really impactful, where I was like at a real crossroads, and I thought I was going to kind of just like go join another type of investing firm, and we were going to move back to the East Coast to be closer to family. I was going to do that. And I remember you saying to me, like, it sounds like you're just going to go do the thing that kind of sounds like it sucks instead of doing the thing that you actually get a lot of energy from, which is all this new stuff and that feels scalable and that you're fired up about. So why are you making that decision? And until someone just reframed it for me like that, I had never thought about it. I was just going to like continue down the path that felt safe. And so it was like a stupid conversation, frankly, but had a pretty big impact.
You had described it. You were like, I'm thinking about path A or path B, but the way you described it, like path A sounded like shit, like it sounded super hard and not that much fun. And path B sounded like a lot of fun with just like, some unknowns, but like definitely good was going to come of it. And I was like, how is this even a decision? Like, it sounds like you're saying I'm choosing between a bad option and a good option. Go with the good one.
Funny story about Path A. So at the time, that Path A, this is real, was to join like a crossover hedge fund, like a hedge fund that also does investments in private tech companies. And my final interview, I had to pitch a stock, and the stock they gave me to pitch was Stitch Fix. And I had to decide, like I had a week, and I had to decide whether it was a buy, or a short, like if it was a long or a short. And I did like a week of research, like made this long deck, like did all this work. I mean, it was miserable. Did all this thing. It was trading at the time at like $46. And it had come off, it had gone up to like 100 in the whole like Archegos, Bill Huang was like pumping up stocks by doing like buying the swaps, pumped all the way up. And then it came down to 46. And I pitched it as a buy, got rejected because my pitch was shitty. And now that stock is trading at $3.56. So I would have taken Path A and I would have gotten fired within 6 months for sure.
Dude, so something that's interesting is like I get, and I know Sean does too, I get asked maybe 5 times a week if someone can like write tweets for me or like cut videos for me and all this stuff. And it's pretty crazy. I don't know if it only happens like what the popularity level is where you start getting those inbounds. But it's so often that I get this, and there's like this weird, I get people asking me all the time to go, are you in Sahil, or are you in this person? Are you in that person? Is Sahil friends with this person? Because there's this like weird circle jerk of a Twitter world, and it feels as though that like you are connected to like many, many, many tens of millions of followers and reach. And like, there's this like weird behind the scenes thing going on with your agency.
It's the dark underground cabal that runs Twitter. No, I mean, Sean, you actually remember this, right? Didn't like some kid hit you up and say that he ghost wrote tweets for me? And then you just texted me and were like, does this dude ghost write for you? And I was like, no, I've never heard of this kid in my life. He was just lying. And then I hit him up saying like, yo, why are you lying to this person? And he completely panicked. But yeah, man, I mean, the world of ghostwriting tweets has now become, again, like it's become a meme because what was it, like Business Insider wrote an article about VCs getting ghostwriters to write tweets for them. That wasn't at all how my agency thing started. It started in like late 2020 because I had started to figure out that threads were the way that people were growing on Twitter. And keep in mind, like, Sean, you were around the group chat at the time, but that was like before threads had become the like thread boy meme that they are today. And so there was like legitimate arbitrage in writing quality threads. And I had all these startups that I had invested in, the founders of which were like, wow, we see a ton of value in having a platform and a brand. Can you help us think through how to do this? Because you'd done it. Like I had at that point gotten to 75,000 followers or so. And so I was like, yeah, let me, I basically like started an LLC, like an advisory business basically. And I started giving like strategic support to these startups on how to think about content. And
how much would you charge them?
I was charging $5,000 a month to a startup for basically like, it was like texting and then maybe like one call every other week. And it was like so low because it was so low on time from what they needed from me because it was mostly like the founders didn't want to actually spend a ton of time on it. They just wanted to be able to like kind of understand it. And then they would have people on their end that just like went off and did things with it.
What was the high level, like 1, 2, 3 bullet points that you would tell these founders so that they could just be better at this?
It was basically like you need your 2 or 3 pillars of content that you're going to be able to talk about consistently that are like valuable for you as a startup or as a founder. So if you're a founder, I mean, at the time it was like, if you're a founder, talk about, building companies and the things you're learning along the way, which now is like ultra saturated on Twitter, right? There's like a million people that aren't necessarily credible writing about that. At the time, there weren't that many founders doing it. Like, I don't know if you guys have seen the like Copy AI founder. I forget his name, Paul. You might be an investor, Sean, or you know that business.
Sam is, not me.
Okay. Yeah. And he was like the first one sort of that was like really building in public, quote unquote, and like sharing about their journey and the things they were learning. So I was basically telling founders, you have to establish like what are your 2 or 3 pillars that you're going to be writing about. Maybe it's, building in public. Maybe it's the industry you're in. Maybe it's like sharing L's along the way and like vulnerability because people find that endearing. It's like, it's called the pratfall effect. Have you ever heard of that? It's like when people who you perceive to be perfect show like chinks in their armor, we find it as humans very endearing, and it actually makes us like them more. And so you're like, playing on that, you're like sharing your L's along the way. But I was basically telling them, versions of that on a regular basis and like helping, kind of craft and advise them on the content they were putting out. And it was like $5,000 a month, probably had like 5 or so clients. I think they were all like startups. I either like the founders I knew or I'd invested in the companies. And so I was kind of around, and it was, beneficial to me to like see them continue to grow and do that.
So you like invest in the companies and they give you that money right back. I like that.
Yeah, it was a good way to hedge this was personal investments at the time. So this was like, I might invest like $25K in a company. And if I was making that back in 5 months, that was a pretty good cash on cash return on the original investment. But then like after, the ghostwriting thing was interesting because basically like early mid 2021, I had a few of those clients come and say like, the biggest struggle for us is that we don't have people that can write this content. Like we don't want to build out a content team when we're focused on product and engineering and all that stuff. Like, do you have people that can write? And right at that time, I had done the course with Julian Shapiro, our friend. We did a Maven course on like how to build your audience. And it was mainly how to build your audience on Twitter. And so half that course was about like how to write good threads and how to write for Twitter. And so I had this pool of like 400 students who had gone through the course, learned the principles of it, knew how to do it, that then I was just able to sort of be a connector between like freelance, writing talent to then support these startups. And, the kind of fundamental of any agency business for anyone that's starting one is effectively that you're like creating price arbitrage where you're like charging a client 10 grand for some or 5 grand for something that maybe costs you 2. And like, the reality for most of these people is you can pay $1,000 to $2,500 a month, maybe depending on the output. And you can easily charge, a startup or a brand 5 for that. Or you can charge like a founder or an entrepreneur who's doing really well and just made a bunch of money 5 for just like the fact that you're the connector between the 2 points. So that was when it like, I would say like really started to scale, but it was never for VCs for me. Like I've never had a client that was a VC. It's all been founders, and it's all been like half tech founders and half just like nuts and bolts, like meat and potato type founders, like Sam's guys.
Yeah, your guys.
Wait, am I a meat and potato guy or
you're
a nut
a meat
in
and
a
potato
bowl?
guy. No, you're a meat and potato guy. Sean's my tech guy. You're my meat and potatoes guy.
Like, if something's like cool or interesting, then it's kind of more of my thing. And if something's like really boring and like, generally correlated with like obesity, it's your thing, right? That's like. So Sahil, I want